All right, let's dive right into this explainer. Today, we're unpacking a massive infrastructure play that's fundamentally shifting South Africa's global export competitiveness. We hear a ton about mining, right? We hear all about the incredible resources buried beneath the earth. But the real story, the one that actually moves the needle for the global economy, is all about logistics. Think about it. Inefficient, bottlenecks transport can literally shave billions off a country's potential export revenue every single year. So how do you actually get those resources out of the dirt and into the global market efficiently? Well, that's exactly what we're mapping out today. We're starting right at the heart of the matter with a truly staggering number, 3.9 billion rand. That's the massive financial commitment recently made by the mining group South32. Now, typically, building and maintaining national railways, that's strictly the domain of governments and state-owned entities. So when a private mining company steps up and drops this level of capital into public use transport, you absolutely have to pay attention because it's a massive anomaly. They aren't buying new drills or exploring new mine shafts with this money. Instead, they're stepping completely outside their traditional lane to fix a critical national bottleneck. So where is all this money going? This specific deployment of capital is targeted directly at upgrading strategic rail networks across two key South African provinces, the Northern Cape and KwaZulu-Natal. And these aren't just random spots on a map. These are the literal arteries of the nation's industrial output. The Northern Cape is this world-renowned hub for iron ore and manganese, while KwaZulu-Natal is home to the crucial Richards Bay Terminal, which is one of the world's leading coal export facilities. South32's investment is laser-focused here. We're talking about improving the actual physical rails, boosting rolling stock efficiency, and expanding the overall carrying capacity of the transport lines in these specific high-yield regions. To really understand why this 3.9 billion rand matters so much, we have to talk about freight corridors. Basically, these are the strategic transport routes connecting mineral-producing regions directly with export facilities. And honestly, this is the ultimate bottleneck for production growth in any industrial economy. It all comes down to the ability to efficiently move commodities from the inland mine to the coastal port. Because look, if your freight corridor is congested or slow or just plain broken, your export capacity hits a hard, unforgiving ceiling, no matter how efficiently you're pulling rock out of the ground. To give you a sense of what's actually moving down these routes, we are talking about critical bulk commodities. We've got manganese, chrome, iron ore, and coal. The global demand for these specific minerals is just exploding right now, and it's pretty easy to see why. Manganese is absolutely critical for modern battery tech and the booming EV market. Iron ore and chrome, they form the absolute backbone of global steel production. And coal, of course, remains a fundamental energy staple for many developing nations. So by upgrading these rail networks, South32 is making sure these highly sought-after materials can flow smoothly from the mines to the ports, ready to feed global supply chains without missing a beat. Section 1. Breaking the bottleneck, the private capital shift. We're witnessing a major structural shift happening right now across the industrial economy to break these historic freight bottlenecks. Historically, the playbook for a mining company was pretty straightforward. You dig the minerals out, and you just rely on the state's transport networks to get them to the port. If the state-run trains were late, well, you waited. If the tracks were degraded, you stockpiled your product. But this new industry trend, the one South32 is spearheading, is all about actively participating in logistics solutions. Mining companies are pivoting. They're basically taking destiny into their own hands. They're stepping away from passively relying on state networks and instead deploying their own private capital to make absolutely sure their supply chains stay up and running. So it really all boils down to this dynamic: resources in the ground versus infrastructure above the ground. Having rich, highly sought-after resources buried beneath the earth is practically useless if you don't have the efficient infrastructure above ground to move them. You could literally have a mountain of highly valuable manganese, but it's just dirt if it's trapped inland. Industry stakeholders have pointed this out time and time again. This logistics infrastructure is the single most important requirement for unlocking additional mining investment. Bottom line, you simply cannot scale production if you can't scale the transport. Section 2, the economic ripple effect. Okay, so what actually happens when a private entity drops billions to fix a rail line? It triggers a massive macroeconomic ripple effect across the whole region. When you map it out, it's this fascinating compounding cycle of growth. Step 1, you improve the freight rail performance. That means more trains moving faster, carrying way heavier loads. Step 2, by directly targeting that throughput capacity, you immediately lower overall transport costs. It just becomes quantifiably cheaper per ton to move stuff across the country. And then step 3, those lower costs and that highly reliable transport create the exact conditions needed to spark future industrial investment all along those major routes.
And it's not just the mining sector that wins here. The impact of a world-class rail upgrade extends way beyond just hauling rocks to the coast. The ports, they see a huge surge in throughput activity, more ship stocking, more maritime jobs, more revenue. Then you have the manufacturing sector, which gets stronger, much more reliable supply chains for industrial processing. And finally, the broader export market sees a massive leap in global competitiveness. When your transport costs drop, South African commodities suddenly look a whole lot more attractive to international buyers compared to other global suppliers. It's a win across the board.
Section 3. The big picture. Execution over announcements.
We are entering a really critical era right now where the macroeconomic focus has firmly shifted to execution rather than just announcements. I mean, talk is cheap, right? But laying actual steel on a railway track, that is what drives an economy forward. And it's exactly what global investors are demanding to see right now. They want tangible capital deployment into productive infrastructure. They want to see the receipts. South32's 3.9 billion rand commitment is an undeniably real vote of confidence in industrial delivery. It sends a super clear signal. This isn't just another theoretical government white paper. This is hard, private money being put to work in the real world to build lasting, productive assets. And the really encouraging part about all of this is that it's not happening in a vacuum. South Africa is actually pushing a massive, coordinated infrastructure modernization drive. As part of a much wider effort to pull in serious capital, the country recently reported that there are more than 160 investment projects either completely finished or currently under active construction. Over 160. That means South32's rail upgrade is actually serving as a really powerful leading indicator for a much broader, sweeping wave of national infrastructure modernization. There's a quote from the report that I think perfectly encapsulates this entire industry shift. It says, "Future growth will depend not only on mineral resources beneath the ground, but also on the efficiency of the infrastructure connecting those resources to global markets." And honestly, that is the undeniable new reality of the mining industry today. Logistics are absolutely no longer an afterthought. They're a critical strategic asset that dictates who thrives and who gets left behind.
So I want to leave you with this final thought as we wrap up this explainer. As the global demand for critical minerals rapidly escalates and the competition to attract mining investment aggressively intensifies, will infrastructure be the ultimate decider of who wins? It's becoming incredibly clear that whoever can move the goods the fastest, the cheapest, and the most reliably is going to absolutely dominate the market. South32 is placing a 3.9 billion rand bet that infrastructure is indeed the key. Thank you so much for joining me to break this all down today, and I highly recommend keeping a really close eye on how these global freight corridors develop in the coming years.